My name is Pamela Cushlan. I'm excited to be here today at the Work Smarter Summit. I plan to show you some insight about merchant services that I think you'll find very enlightening. And the more you know, the more smarter, educated decisions you can make. So in that, consider the history, the risks, the obstacles, and the options that you have. How do you make decisions if you don't know more about it, right? So the more you do, again, the more you'll flourish. So sponsors, thank you for having me as a presenter. I'm honored. Presenters, thank you for sharing your expertise. And participants, particularly, thank you for your valuable time. I applaud you for investing your time at this Work Smarter Summit to learn, grow, and become wiser. I was an office manager for decades. I've seen firsthand owners following their passions, but leaning on professionals for their input to get the logistics handled for their business. Unfortunately, many providers in the space of payments processing, they lack scruples, integrity, and transparency. So at a young age, my parents taught me to take calculated risks. This is my dad. He refinanced our home and bought rental properties. It only takes 15 grand to play Monopoly with real money. I always knew I wanted to do something with money, but I didn't know what. My point here, though, is some risks in life you don't have to take. And so the more you know, the smarter decisions you can make. So some basic 411. Commonly in merchant services, you hear of the terms ISO and MSPs. Now, in other industries, these mean different things. But in the payment processing industry, in my experience, there's really no difference. After, I think, 7 years this July, I've been in payments. ISOs mean independent sales organizations, where MSPs are managed service providers. The ugly truth about payments is it's very similar to the Wild West. There's no legal oversight. And yeah, that's absolutely nuts that a multi-billion dollar industry has no financial governance, but I'm here to give you the honest truth. So anyone or any company can tell a business owner one thing and promise one rate and then charge them something completely different. And there's no legal or financial repercussions for misleading them. And yeah, it gets worse, unfortunately. Not only that, there's no trust, there's no certifications required to sell payments. And so payment processing companies, they hire very commonly 1099 independent contractors. But the fact is they're doing very, very minimal due diligence. So someone with a felony could be working in payments, collecting your financial personal data without you knowing it. So again, do your due diligence, make sure you know who you're talking to and trusting, because it matters. Now, consider cash versus electronic payments. Back in the old day, cash was all we had, but that created more human error, more risk of theft, more obviously, and even in a COVID time, it reduced sickness to avoid cash, right? We're actually becoming a very cashless society. In fact, my favorite burger shop is cashless. So there's a lot of convenience in having electronic payments, and I think that's something to be noted. So the purpose of a payment processor is to connect your business to the network. And that basically means we're the intermediary between your business, the customer's bank, which is the issuing bank, and your business's bank, which is the acquiring bank, as well as the card networks, which is the card brands themselves. And it's imperative that we're routing your transaction very securely. So of course, we're verifying the payment information and checking for sufficient funds or credit, and then obtaining the authorization from the issuing bank to complete the transactions. Now, all of my partners actually promise next day funding, but many processors take 2 business days, or up to 3 even, to fund their batches. And to me, why wait? Why should they get to hold on to your money? It's your money. Make sure you're getting your money quickly. So what do? We encrypt sensitive data. We protect it from fraud and data breaches. We adhere to the industry standards of PCI compliance. We applying fraud data detection, tools and techniques to identify and prevent suspicion activity. We're streamlining your operations. We're making sure that there's tons of payment options for your customer. The more options they have, the quicker they want to pay you. And then, of course, we're streamlining your operations as well, so that you have the ability to function and grow faster, right? And then also, of course, there's reporting and analytics, tracking your cash flow. And the more insight you have on your customers' purchasing power, the better you can do. So all of these things that we're doing is hugely important. Yes, we're transferring money from your bank to theirs and whatnot, but between the chargebacks and the security risks and there's actually a lot of complicated work that we do behind the scenes that a lot of people don't know much about. Now, PCI compliance was a mandatory standard in December of 2004, the first time. This was created because in 2000s and early 2000s, in the late 1990s, the internet skyrocketed. And so online shopping rose hugely. But of course, fraudsters recognized that and they started doing their thing, right? Creating more fraud. And so these risks and increased risks had the Visa, MasterCard, and large card brands create a unified standard to make sure businesses were handling the card data securely. And so this is what happens when you're not compliant. I'm not trying to pick on these two companies, but if you don't understand the importance, I think you might be missing the point. So in 2013, hackers stole the data of Target, and $18.5 million in settlements was paid and $202 million in legal fees. Equifax in 2017 lost personal information of 147 different people, including their credit cards. $425 million was paid in settlements. So yes, the liability risks of being non-compliant is huge. So what does it take to be compliant? Basically, compliance begins when you first get a merchant account. I think you have like a month. And then also yearly, there's a renewal. Now, occasionally the renewal time changes. It depends on your business. That can vary. However, the questions are basically, what firewalls do you have? How are security passwords being handled? Card data not being written down. And again, owners just knowing that they need to do the renewal. So there's a good portion, I'd say 60 to 70% of businesses that are not PCI compliant in their second and third years and beyond because they don't do the renewal piece. So again, having a processor that's got your back really matters. And so that's one of the main things I think that's choosing your processor, but often it's just an afterthought. I'm going into business, this is what I want to do. And then they don't really know who to go to. They don't really think about who they can shop to. So they choose their bank or they choose a name brand that they have commonly heard of, which it's understandable. How do you know what you don't know? And how do you ask questions you don't ask? But the thing to understand too is if you're just shopping for price, you're really missing the boat because service and technology to me are just as important. And also just to become educated about some of the basic things like what is interchange and what pricing models you have to choose from. Some of those things are the things that I'm going to be talking about here. And then the core decisions on what your needs are, and then talking to a merchant professional to help you optimize what needs going to be best from you, because there's hundreds to choose from. The more technology gets advanced, the more technology there is to choose from. Understanding interchange rates. So the interchange rates are actually the cost of the card, the cost of doing business themselves. And unfortunately, too, a lot of people use what's called interchange pricing plus. And with interchange pricing plus, that's the interchange fee plus a modest markup. So the thing to understand is the modest markup is really the only place that a processor can make a profit when it comes to interchange pricing plus. So unfortunately, some of them, again, this is my truth bombs here. I've got many, right? But unfortunately, there's a lot of fraudulent or unscrupulous, I should say, merchant providers. And they will pad the interchange rate because they don't think that you business owners will know it. I've seen it multiple times. It's really saddening, but I'm just here to give you the facts about the industry so that you can be wary. So basically, the issuing bank that's paying the merchant, which is the acquiring bank, the interchange rates are decided by the card holder's issuing bank. So there's tons of different issuing banks, obviously, that are issuing debit cards, credit cards, but they're doing the authorization, the fraud protection, rewards programs. The more expensive and the more rewards a card has, the more expensive the rate is. So there's hundreds of different interchange rates. Now understand, no matter what pricing model you're choosing, from flat rate pricing, interchange pricing plus, dual pricing, cash discounting, and tiered pricing, the interchange rate is always being paid to the acquiring bank. That's exactly what happens, is the issuing bank is paying the acquiring bank. But these, again, basic cards, rewards cards, premium cards. So if you're ever getting quoted, besides flat rate fees, if you're getting quoted an interchange plus pricing quote, there's really no way to know what your rate is because unless you're getting the exact same cards every year or every month, and the exact purchases, your rates are going to change month by month by month. And so in most environments. So card present is actually just like if they're current and they're actually physically at your business to swipe or use the chip reader or tap and pay. Where card not present is when you're online or you're on the phone and the card number is keyed in. So that creates, again, more risk and therefore is costlier. The other category too is the type of merchant that you are. That can actually add to your costs. And then of course your transaction volume. The higher processing volumes you have, the more negotiating power you have to reduce your rates. Flat rate pricing. Flat rate pricing is commonly used by merchant aggregators. Those are Square, Stripe, and PayPal. So it's very simplified and it definitely serves a purpose. The kicker is anyone can get an account pretty much. There's no underwriting, you'd have no credit checks. It's really ideal for small businesses and for startups. And it's also really great for predictability. You know exactly what you're going to pay. And the other thing too, though, is to understand is because everyone is sharing an account with a merchant provider like this, anywhere, Stripe, PayPal, and Square, that means they control your money and they control your fraud. So they have to represent you in doing everything. Having a merchant account number yourself gives you the ability to work directly with the card brands to fight your own battles and to control your own money. Once you're sharing a merchant account with everyone, like these companies, if Stripe, PayPal, or Square are holding your money for days, weeks, or months, how do you get them to fight your battles to give you your money back? And so I think that's the biggest thing I want to make sure you gain out of this is there's a time and place for this. But just like liability insurance on a $2,000 car, once your car, if you're buying a car that's worth 20, 30 grand, you should probably get comprehensive insurance. And in that case, when it comes to merchant services, you should have a merchant account if you can. And I do understand some of these are exclusive, so you might be using some platforms or softwares, and they don't give you a choice. But again, maybe don't use those options. Maybe use WooCommerce so you have options. But if you want to, again, just know what you're getting into. You know, buyer beware. Tiered pricing. Tiered pricing is actually 3 different tiers. You've got qualified, mid-qualified, and non-qualified. So basically, it's 3 levels of flat rate pricing. And so depending on the card, depends on which tier they bill you at. The problem with this is it actually lacks transparency because one thing can be in one tier and then the next month that card, very same card, might get billed the second tier from the first tier. You really don't know what you're getting. Banks are commonly using this. I do feel like this particular pricing model is kind of out the door. Now, I do know of a couple people that actually still have decent rates because of this. So again, it's not one size fits all, just like there's some banks or some credit unions that are great. And sometimes they're not so great when it comes to service. Traditional surcharging. Traditional surcharging is when the merchant is adding a fee to the purchase of when a customer pays a card with a credit card. So the customer can pay with a debit card to avoid the fee because the business pays all debit fees. This is actually not an option in Maine, Massachusetts, and Connecticut. It's prohibited in those places. But again, generally the fee is capped at 3%. So oftentimes the processor may charge an additional 0.5% to the business. So they'll charge maybe, again, the merchant, or excuse me, the customer pays 3%, but the merchant still might have to pay a 0.5% rate because again, some cards are 3.5% or higher. And they really shouldn't have to pay any percentage to do your business, right? But these have to be registered with the card brands, and there are fees if you forego this. Now, a lot of people, I see handwritten signs up at the back of the business. If it's not actually line itemed on your receipt, and if you're not registered with the card brands, you're not doing this in the legitimate fashion that you should be. Same thing when it comes to, you know, when you get your receipt, you should see a line item on your receipt. And if you're online shopping, there should be notification. Just as you walk in the door, you should see a sign. Everything about this is supposed to be set up so that it's transparent. So you're never like blindsided. You know what you get before you make the charge. And I think that's super important. But this can actually save you a boatload of money if you go from regular interchange pricing plus to traditional pricing. You can save 50% of your merchant services fees. So it's definitely a bona fide option. And honestly, it's very fair, especially for like auto industries, because they're dropping off the car, they know in advance that they're gonna, when they come back, they either have to bring cash or they have to use their debit card, and otherwise they're gonna pay a fee. So I really kind of like this platform. It's actually very fair. The other option, of course, is discounting, cash discounting and dual pricing. Now cash discounting, these are very similar. Basically, they're pushing the cost to the customers, but they're doing it in different ways. So with cash discounting, everything that the business has, service or product, has increased by the processing fee, generally 3.5%, 4%. 4% if it's e-commerce. Now, if they pay cash or in e-commerce, it would be ACH, then they get a discount, which is exactly how this works. So with dual pricing, however, the terminal itself is showing you two different prices. And usually, and as well, if this is done legitimately, you're actually on the price tag showing that it's $100 or it's $104 for the card price. So you're seeing the two different prices before you purchase, and it's always clear and transparent. Again, with both of these, proper registration with the card network, so you're actually signing up to do it as such, is very important. And notification and transparency to your customers is also key. But this is an option where you literally can pay no merchant service fees whatsoever. And that's huge. Like, I've saved companies $16,000 a year and more. Like, it's nuts how the potential of cash discounting and dual pricing is for businesses. And the concept is really, it's like, I can't afford to pay your fees, so I'm just going to incur it in the cost of the merchandise. Now the question becomes, do you tell them about it by showing two different prices by dual pricing, or do you just push the fee up in advance, and then if they choose to pay cash, they find out they get a discount? It's pretty much the choice there. So merchant statements, I think merchant statements are super important to review. And yet, oddly, I hear all the time that businesses don't even know how to access them, or they're too busy, or they're just so frustrated because it's hard to decode them. I do believe processors intentionally complicate these statements, but there's a lot to be known on a merchant statement. And it's not that it's like privy information. You can't see a bank account on a merchant statement. So you're also not giving away the farm by showing someone the merchant statement. However, you are able to see the pricing model that they're billed and what rate. You're able to see the different card types that are going from different volumes. So, and that's the case with all of them except flat rate pricing, because again, they're showing one flat rate. So they don't have to show you the different card types, whether you're getting regulated, non-qualified. You don't get to see that detail. So you just get one bill, one bucket, and their statements are very clear and cut. But at the same time, they're harder for businesses like myself to decipher what savings I can offer them if they choose to go to Interchange Pricing Plus, because we don't know how many debit and credit cards they're getting, right? And we don't know what their volumes are. Just like, really, if you're getting Interchange Pricing Plus, you shouldn't be able to get quoted a price of what your rate is, because whatever it is one month, it certainly shouldn't be the same the next month, unless the exact same customers come with the exact same cards and make the exact same purchases. And that's just not a common situation. So you can discover if someone's non-compliant because of the fees on the statements. You can discover average ticket. You can see hidden fees. We can decipher if a rate is padded. My people can do just that. And again, you'd never know unless you have an audit done on your merchant statement. So it's very important to have this done. And then again, to verifying your monthly volume, how many transactions, average ticket, all of that. So merchant contracts, I wanted to go over this quickly. Now, I personally don't feel merchant contracts are advantageous, although I did do some Google searches and Gemini searches, and of course, they show it to be at times advantageous. So I wanted to list this. In my opinion, the biggest thing to understand is there's usually early termination fees that can be very, very costly. I've heard of 400 and I've heard of 4,000, and they typically auto renew for years without advance 60 to 30 days written notice. And there's often in tiny little print, because they're all made in tiny little print, insight that you don't know about, whether it's monthly minimums, whether it's about rate increases. Again, rate increases and rate creeps, they're common whether you're in a merchant statement or not. Now, I have many of my processes that are month to month. Now, technically, they're still signing a contract, but I'm earning their business month after month. So if you're stuck in contract and you're getting crappy service, there's really not much you can do about it except pay the early termination fee. So knowing about your options pays, and the more you know, the more educated decisions you can make. So be careful how you're gambling. This is me with my family, gambling with them, but at least when I lost there, they're making the money. Don't let the credit card brands make your money. Make sure you're making wise decisions on your own behalf. I thank you very much for your time, and I hope that this insight helps you in doing more research. And if I can be of any help to you whatsoever, definitely reach out to me. Have a wonderful day, everyone. Thank you. Bye.